That's implying just under 10%. We'll call it 9% per acre per year, a revenue uplift, which is definitely, I think, a meaningful value proposition for farmers. And certainly, if you apply to the broader, apple market, that is pretty significant for the entire market size there.
Hey y'all, welcome back to the channel. I'm Japheth Mass, and I'm going to quickly intro today's BCG case featuring Alex and Sean. These two walk through a BCG-style market entry problem centered on a manufacturing company evaluating a potential new growth opportunity. You'll see how they size the market, evaluate competitive dynamics, and assess the capabilities required to win, all while using the structured, hypothesis-driven approach that BCG interviewers look for. This is great practice, so pull out your pencil and a paper if you're preparing for BCG or any firm that emphasizes growth strategy. If you want more BCG cases, make sure to subscribe to the channel right now and hit that notification bell so you don't miss the rest of this case series. Let's get started.
Your client is a Korean conglomerate, Danut, that acquired a small Boston-based biotech firm last year. This company has developed a chemical that helps control the ripening of produce. The chemical has been developed over the last 5 years. After limited testing, this chemical appears to work especially well with apples. It allows apple orchards to harvest early and improve the overall quality of the harvest. Your client would like to know if they should attempt to commercialize this chemical. How would you structure your approach to this problem?
Yeah, it sounds like an awesome case and certainly an interesting one here to work with. So just to play back a couple key details here for you, Alex. Our client, Danute, has acquired a small Boston biotech firm. Sounds like they've developed a chemical here recently that generally helps the ripening of produce, but it seems like it works especially well here on apples by, basically allowing an earlier harvest and improving the overall quality. So a duality there in terms of expected outcomes. And our client today is trying to see if they should attempt to commercialize, this chemical. Did that all sound correct to you?
Yeah, Sean, that sounds like the right direction to me.
Excellent. Just a couple questions here for you, Alex, at the outset. So as Danute owns the biotech firm, as we discussed, I'd assume they hold full rights to this chemical. Can we assume they control the IP outright at this stage?
Yes, that's a totally fair assumption to make in this case.
Awesome. And then one more question here for you, just as it pertains especially to the business problem at hand. The prompt mentioned apples specifically as an offshoot of produce here. Um, should we assume that that's really the only crop in scope right now at this stage?
Yep, I think it's totally reasonable to limit our scope to only focusing on apples.
Okay. Okay, tremendous. Thanks so much for answering that. Alex, if you don't mind, I'm just going to take a moment here to collect some of my thoughts.
Absolutely, feel free to.
Excellent. So I'm thinking about breaking down this problem here for Danute today across four key areas of analysis. So first, I'd like to start off, I think, with an overall really assessment of the market here, starting broad. So I'm thinking about commercial apple market size and key geographies, which would be, in my mind, the US, EU, and perhaps Asia as well. I'm thinking about adoption rates of this post-harvest enhancement technologies and what that looks like and will continue to look like. Again, for a market I'm not super familiar with, I think that would be helpful. I'm thinking also about the percentage or share of orchards using early harvest or quality-related enhancement tools. So for my second area, I'd like to look specifically at the product itself. So I'm thinking about required dosage and perhaps cost per acre for doing this application of the chemical product. I'm thinking as well about impact of chemical on time to harvest and output quality. So basically just quantifying what was mentioned in the prompt and being a bit more specific about that. And then I'm also thinking about storage life and perhaps stability of the product under typical harvest related conditions. Third, I'm thinking through competition related outcomes and metrics here. So number and scale of competing ripening or preservation products, assuming there are some on the market today. I'm thinking about pricing and efficacy versus competitors. Again, I think there is something to be said for first mover advantage, but I'd also want to consider, again, what the competition might be doing if that's the case. And then also I'm thinking about here, again, in a very new and emerging type chemical related fields here supporting agriculture. I'm thinking about patent coverage on IP and potential substitutes down the line. And then finally, I'm thinking about a go-to-market rollout here. So what in-house production capacity looks like and cost to scale, if that's the approach the client would like to take, I'm thinking about partnership opportunities with relevant agricultural distributors and perhaps agricultural users and end users for that matter, what that would look like, and also timeline and perhaps investment requirements needed for a full-scale launch here to make it successful. But with that being said, I think starting with the market makes the most sense, and digging into any of those metrics that may or may not be available on hand today.
Absolutely, Sean. Great direction there. Great structure. Thank you so much for providing that, and definitely heading the right direction on the case. So moving on, let's first look at the overall apple market. Apples are grown throughout large parts of the United States. So for the moment, our client is only concerned with Maine as a test market, and I have some data based on that for you to start your analysis. So currently, 20,000 acres are devoted to apple orchards in the state of Maine. And the average revenue for an apple orchard is $30,000 per acre. The market is growing at 5% per year, and there are approximately 200 orchards in Maine. In terms of questions, the first one I have for you is what is the average farm size? And then overall, how big is the market for apples in Maine?
Okay, awesome. Thanks for sharing all of that, Alex. So following in line here with your two questions, I think you shared four pieces of helpful data there, so appreciate that. For average farm size in Maine, I'm thinking here, again, to limit the scope of the analysis, I'm thinking about the total acreage of apple orchards in Maine, and then dividing that by the number of orchards to give us the average farm size. So inserting some numbers into that mathematical setup there, I'm thinking about doing 20,000 acres divided by, again, the total number of orchards, which, as I heard, was 200. And then just doing some simple mental math there, that looks to me like there's going to be the average farm size of 100 acres there in Maine. And then second here, I'm looking at the overall market size. So basically, I would want to take the total acreage across all apple orchards, which, as you mentioned, was 20,000. And then the average revenue, it looks like per acre, which was 30,000. So taking the 20,000 acres times 30,000 revenue per acre, that is going to be, just give me a moment here for some quick math. And I believe is going to give us 600 million there for a total market size for the Maine apple market based on the apple orchards, and again the revenue per acre figure that we're working with, and presumably that number is going to grow at 5%. So while it's 600 million currently, within the next year, presumably that will be up to about $630 million dollars. But basically, my takeaway here as well, Alex, we're looking at basically orchards average about 6 million total. Basically, in terms of if we broke that down, if we looked at the average farm size and the overall market size. So 6 million revenue is pretty fragmented, I think, from an orchard standpoint. I'd really want to kind of take this one step further to kind of validate and pressure test this fragmentation assumption, see the distribution of orchard sizes, not just the average. Perhaps, there's some skewing there inherently. And I'd also like to assess really the value of the ripening chemical, can create per apple farm as well.
Absolutely, Sean. Thank you so much for the quick, concise math overview, and definitely heading in the right direction. Um, our client's product provides three benefits to orchard owners. The first being earlier harvesting, as it costs money to maintain a growing field of apple trees. The possibility of frost in Maine forces farmers to cover their trees, etc. So our client gave a sample of the product to a farmer with 300 acres. And this farmer spends $1,500 per night to maintain an active crop of apple trees and was able to harvest his crop 10 days earlier by using the product. Additionally, our product offers better consistency of apples. Orchards split their harvest between the whole apple market, which is typically 25% of the crop, and the juice market, which is 75%. For the whole apple market, the farmers sort through the harvested apples and separate any apples that are not red and ripe. So our client's product improves the consistency of red apples and improves the yield by 5%. Additionally, our product offers increased sweetness. So for apples dedicated to the fruit market, this product improves the overall sweetness of apples. Thus, it takes fewer apples to make apple juice. And it is estimated that the sweetness factor improves yield by 10% in the juice market. Um, the client would love for you to calculate what is the estimated incremental profit per acre.
Okay, fantastic. So backtracking there, incremental profit per acre. I'm going to start with the earlier harvesting and work through some of those numbers. So as you mentioned here, Alex, using this essentially test case, and understandably, frost can be a concern in Maine. So this farmer in question had 300 acres available, and spends 1,500 a night to maintain an active crop of apple trees. And using the chemical, was able to harvest his crop 10 days earlier. So basically, I'd want to break this down and get a acreage per acreage cost saving here. So taking that 1,500 a night, dividing it by the acreage would be essentially $5 an acre um, of savings here, and then multiplying that by 10 nights would be a total of $50 savings. Again, that's per acre. So that's for the earlier harvesting. I'd like to move next to consistency of the apples. Um, we know that, again, using this per acre information from the prior question at $30,000 per acre for our average revenue, 25% now for the whole apple market. That would be boiling that down to 7.5K, so 7,500, and then multiplying that by 5%, which would be, just to do some quick mental math, I'll do 750 is 10%, divide that by 2 would be 375. So that would be additional, incremental profit there of 375. And then finally, we have sweetness. So this is essentially the other side of the market. So I'd like to take the 30K figure, multiply that by 75%, which is essentially going to be 22.5K. And then the 10%, I think, as you mentioned, improvement in yield. Multiplying the
Uh-huh.
22.5K by 10%, that would be 2250. So just to do some final quick mental math, I'll do 2250 plus 375 plus 4 plus 50. And then that will give me 2675 is my number there for my estimation on the incremental profit per acre across those three factors.
Yeah.
Um, that's implying just under 10%. We'll call it 9% per acre per year, a revenue uplift, which is definitely, I think, a meaningful value proposition for farmers. And certainly if you apply to the broader, apple market, that is pretty significant for the entire market size there. So I'd also, I think next there's some pricing details and how much of this incremental revenue can be captured through a pricing mechanism, and really whether this resulting profit margin justifies this commercialization ultimately for the client.
Absolutely. Thank you so much, Sean. Great overview on the math and really clear job of working me through it. Um, Moving on to the next question. Now we need to determine potential pricing and profitability. A study of technology innovation in the agriculture industry has shown that new products typically capture 1/3 of total benefits created for users. In addition, it is estimated that the product will cost 1,000 per kilogram to produce, as the raw materials are mainly egg yolks. Transportation, warehousing, and sales and marketing are included in the given cost I just mentioned. And tests indicate that 1 kilogram of the product can support 200 acres of apple crop. Um, we would love for you to figure out how we should price this and then what our potential profit would be at that price point.
Okay, so I mean, first off the bat there, just looking at the cost side, $1,000 per kilogram and a kilogram supporting 200 acres. I'd like to, um, look at to get this on, no pun intended, an apples to apples scheme here. Get a per acreage cost there, so that is going to be 1,000 divided by 200. $5 an acre cost is what I have in terms of manufacturing. And then if we're talking about capturing 1/3 of the value there from that technology innovation study, um, let's call that maybe $1,000 just to be simple here. even if you knock that down a bit beneath 1,000 for a proper third calculation, you're still going to be looking at a massive profit margin. But using the $1,000 figure for right now, just for an easy number to work with, as your revenue number minus the $5 cost, again, for per acre here, we're looking at $9.95 as the profit margin. And then the profit margin percentage is literally over 99%. That would be exactly 99.5% using that number, which is incredible. I think any one would want to jump into this market. That is certainly impressive. So I see a lot of positives there, and we really want to assess then scaling considerations, what regulation and launch would look like, as well as distribution infrastructure, and further, I think look into some pricing related considerations, and also potentially some additional markets as well beyond Maine, beyond our starting point. So all signs point to systems go at this stage.
Absolutely. Thank you so much for that overview. Does seem like a very good direction to go. Um, and kind of hopping off of that, now that we've determined that it is likely quite profitable, what factors should the client consider when deciding whether to expand to additional markets after launching in Maine?
Gotcha. If you don't mind, can I just take a few seconds here to jot down some thoughts?
Absolutely. Feel free to.
Okay, so I'm thinking about here, I think first and foremost, market attractiveness. Really, what's the Apple sector, Apple market size by region, by state, however we want to look at it, and what the growth rates are, and perhaps need for harvest optimization. Next, I'm thinking about one step further here for to peel a layer back, the competitive and regulatory landscape. Are there local competitors? How strong are they? And then also, is there any additional state level, perhaps regulatory adherence that needs to be followed, and what is the level of complexity, again, at that state level? And then finally, a commercialization path approach, the availability and quality of the local distribution partners to get our product to our end users, especially folks maybe that are a bit more remote, given their agriculture focus. And then also thinking about operational cost, and perhaps the complexity of scaling the production sufficiently.
Absolutely. Sounds like a good path and a lot of relevant factors to analyze there, Sean. Um, Coming to a close, our client has asked for a formal recommendation. What would you like to say to them?
Absolutely. So our goal today here was to work with our client, Danute, to evaluate whether to move forward with the commercialization of this ripening control chemical developed by US Biotech that they had purchased. We focused on the viability of launching within Maine as a first, let's say, test market here, and considered some details pertaining to that. At this stage, I recommend moving forward with commercialization in Maine. The product delivers meaningful value to apple growers, increasing per acre revenue by almost 10%. And early pricing could suggest really the client could capture this value with extremely high profit margins in place. And one key risk I'd like to mention is that whether these results will scale to larger, more consolidated markets, I think is something to consider. We also really need to test assumptions around production costs at scale and what that looks like, as well as pricing, flexibility, and different mechanisms across geographies. So some next steps I'd like to recommend, moving forward with conducting a pilot in Maine to validate adoption, willingness to pay, and overall operational and distribution logistics, assessing the cost structure of a full-scale production and potential for any partnerships, and then finally prioritizing future market entries based on some things we discussed: customer attractiveness, market size, and potential for regulation and/or competitive barriers.
Absolutely. Well, that concludes the case. Thank you so much, Sean. Absolutely killed it. Really great structure, and overall a great performance in the case. I have just a couple points of quite positive feedback. I think starting off in the outset, you did a very good job recapping and asking insightful, clarifying questions, and then hopping right into a very comprehensive but efficient structure. So I really appreciated that. And then beyond that, this case was quite quant heavy. So great job overall throughout, I think, the three math questions, setting up the math and then completing it. It was quite easy to follow your logic and the calculation. So fantastic job there. It would have been easy to steer you back in the right direction if you went like off the correct path, but you didn't. So fantastic job on overall in this case.
Fantastic. Yeah, thanks so much for delivering this really interesting case, and excited to see where it goes for the client.